The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. Markets in red territory. Market been quite a tear to the positive side, giving back some of those gains, rolling over a bit from yesterday. And this morning, we're down by about 0.7% right now, off by 40 points, trading at 59.20 in the S&Ps. NASDAQ 100, we're negative by about 150 points. 0.7% in the red, 21,300. You have the Dow right now down about 0.9%. UNH trading lower yet again on another report. This one that they were paying off. And what was it? I was just looking at nursing homes. Yeah, to limit and nonetheless kickbacks, right? All about kickbacks, illegal kickbacks. They're saying it's already been investigated, but that's putting a hamper on the Dow yet again. You have UNH pulled up. They're down by like $15 today. Yeah. From 321, and there's the action on that report. You were already in the negative with the market. You dive down to 295. We're back to 305 right now, but kind of adding to the volatility there. And the Russell off by 1.2% right now. We jump over to yields, and we're coming right back to where we were on Monday, just like that. So much for the pop. Lower price, higher yield coming at you. We got the 30-year right now pushing 5%. We're going to be talking to our man Teddy Kegstad at 40 past the hour. We'll talk some currencies. We always talk some yields, talk some commodities as well. We got the 10-year right now at 4.54. Okay, 4.54 as we have lower price, higher yield coming into that low of Monday. And you have the 30-year at 5.03. 5.03. The 30-year above that number, 5%. Yields on the rise right now. And what's interesting is, I can't wait to get Teddy's take on this. Yields are on the rise. The dollar is certainly not on the rise. Okay, we got dollar weakness. We got a break below 100 again. You put this thing on a weekly. Okay, that's a decisive break, man. You know, I was thinking about it, looking at it this morning. Large red candle on a weekly. Boy, if we ever got like a bearish engulfing of all that action since April 7th, nonetheless, back below 100 as the bears are back in control right now of the dollar. And what's interesting is, right, what are they doing today? You're selling off everything again, as in you have equities lower, S&P's off by 0.4%. We have fixed income trading lower, okay, back below the lows of yesterday. And since the close of action, down about what? 10 ticks or so. But nonetheless, we have lower prices in fixed income. And we have dollar weakness. Not always the case that all three are trading lower. Not usually how it makes in terms of when you see higher yields, usually you're going to see people coming to the dollar to access those higher yields. It's not happening. Okay, when people are selling equities, they're usually taking the money they get from selling equities, and I'm dumbing things down, okay? But to a certain degree, that's why when equities sell off, right, you go risk off. Everyone buys fixed income. That's not happening. Equities are trading lower, and as people are selling stocks, which are driving equity prices lower, where are they putting that money? Not to use in treasuries as prices drop, not to use in dollars to access treasuries as those drop. They're going elsewhere. Now, maybe some of it's going into gold, okay? Gold up by $20, trading at 33.04, but you get the point. And this is a worrisome trend when you get all three, equities, fixed income, and the dollar, all trading lower. That's what's happening this morning. As we have yields spiking, you got dollar weakness on yield spiking. One of the most worrisome relationships. We'll get Teddy's take on that. Interesting day as always. All right, we jump around to what we got going on in this market. Target, yeah. Oh, look at this. So they were lower, and it's just getting worse on whatever's going on in that conference call. But you pull up Target shares, they cut their outlook. They blame tariff uncertainty and the DEI rollback. They're getting it from both sides, right? As in, nonetheless, they missed first quarter revenue estimates, transactions fell, and the retailer cut their outlook. Transactions across stores and websites down by almost 2.5%. The average customer spent less than 1.4. So that's transactions are down almost 2.5%. And people aren't just spending more, going to the store less. No, they're going to the store less, and every time they go to the store, they're spending less. That's a problem, man. There were a couple times when you might have transactions dipping lower, but you had the amount people were spending going higher, right? Where you had inflation kind of carrying some of these retail equities in particular. I remember many times you had transactions dipping, total transactions, but you had the actual value going up because of inflation. That's not the case, man. Yeah. And they're struggling, to put it lightly. They're talking about the economy. Now, beware the messenger, okay? They're not going to say that this is all having to do with their equity, right? They're not going to say this is just a Target problem. We're the problem. It doesn't have to do with the... No, that's not what they're going to say. Okay, they're going to say this is a bigger issue. It doesn't have to do with us. Where the truth lies, probably somewhere in between, okay? In terms of, yeah, it can be the economy. It can be consumers. It can be a little bit of worry about tariffs creeping in, etc. But guess what? It's probably at least a little bit of Target as well, man. Yeah. Of the 35 merchandise categories, okay, the company gained or held market share in only 15. Yeah. They are losing to retail competitors. It's not just the economy. I love Target being in Target, man, but they got a problem. That's it. Yeah. But we got to be growing share in 60, 70. They're losing share, period. They got less transactions, less money on it. And yeah, it said it expects earnings per share $7 to $9 as opposed to 9 to 10. Quite a revision in terms of where they're looking. Yeah, earnings $1.30. 161 was the number, but look at the revenue miss, right? Talk about $500 million, $400 million in 90 days. And yeah, following the heels on Walmart, Target, retailers, not all created equally, right? You take a look at Target. So we're going to open at about $91 this morning. We closed at 98, and we're going to be pushing the tariff lows, right? Yeah, I say the tariff lows, the reprieve day, the 90-day reprieve day. You're cut in half from where we were in April. My goodness, on this equity, man. Back it up further than that. Let's go back further than that. We're hitting 91 bucks. Look at this. All right. You're coming back to 2018 highs, and we're not that far from 2015. $85. That's probably where you're heading, man. $85 to $90. You're going to open at about 91 bucks for Target. But anytime you see that type of deal, right? When you're shrinking as a company, what's the company worth? Well, if you're shrinking, you're on the path to zero, right? Transactions are going down. The amount of money they're making per transaction is going down. And then they're losing market share to their competitors. Yeah. All right. We jump over to Lowe's this morning. Lowe's. Pull up their chart. LOW. Quite a different story from the Target chart. And we're trading higher this morning, up to about 235 from 231. And yeah, we'll keep that full year forecast. Buy it. Reaffirmed the full year forecast, on track for year-over-year sales growth. Yeah, so it's not just the economy, Target, and investors are saying that on the open. Stay tuned, folks. Markets in the red. We'll come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&P down by about 46 points right now in this market. You take a look at a daily. We talk a little bit of price and volume. We've been talking about this area for some time. It sticks out on the chart. And probably not a coincidence that you get right to the top of that range, right? What do we hit yesterday? 59.9350, within 6.5 points of 6,000. And if you look at where we started on February 27th, which is really when that started, that volume started to accelerate. You can make the case that it started on the 25th, okay? Basically 6,000, folks. Right there. We touched that level. We had sustained selling for 3 weeks. You got a slight reprieve into Liberation Day. Things accelerate. And, of course, we got the 90-day pause on April 9th. But don't forget about this range, man. Okay, everyone takes this range out of things, but watch the price and volume. Look at the volume we've traded higher. Look at that volume we had from late February until the lows of about March 14th. That's on the S&Ps. You take a look at the NASDAQ 100, same exact deal. February 27th, maybe February 25th is when the volume really started. You could even make the case it was right at the top, man. Okay. On February 21st, folks, in the NASDAQ 100, we did almost 700,000 contracts. Okay. If you don't include anything of these 5 days when all hell was breaking loose at the market lows, the 90-day pause, the day following the 90-day pause, okay? If you don't include those 5 days, right, we've done 700,000 twice in the last 6 weeks. 700,000 twice in the last 6 weeks. Meanwhile, we were doing 700,000 almost every single day from February 21st until March 14th, every single day. Now, yeah, there was one day underneath it at 640. There was 694, but there was a sustained level of selling. I've talked about it many times, but man, you know, it doesn't mean you have to short the heck out of this market. Okay, it doesn't mean that the market needs to trade dramatically lower. but you better believe it's going to take a lot to trade dramatically higher over this area when you have that much selling in there. Okay, you're higher on fumes. And just to give you a quick, the volume, it just keeps going down. You put a little linear regression on those volume numbers, basically, and you don't even include the cherry-picked highs, okay? It's lower volume numbers, man. Yesterday, 431,000 contracts. I just told you we traded 700,000 contracts for almost a month straight. Yesterday, half of that. So, and even, every day that we were at the top there, 500,000, 535, 400, 504, and 431. Very light volume coming into that area. And yeah, now we got a little selling. We got the S&Ps off by 48. All right, talking a little bit of tax. So, and this one's out this morning, okay? Only in the last hour and a half. A lot of SALT discussions, the tax deal. Now, what's interesting is here, you're going from the House, okay? First, they're going to take it in the House. Then they're going to send it over to the Senate. Then the Senate's going to take their time and send it back to the House with revisions. And so it's interesting to see. Is the Senate going to keep that? The Senate's worried about that too. Everybody should be worried about adding $3 to $5 trillion in debt. Okay, we have yields rising, with the dollar dropping on all that. But yeah, they're talking about raising that deduction to $40,000 from $10,000 for a decade. Listen, coming from Massachusetts, man. Okay, it's got to be particularly frustrating, right? Anyway, for what it's worth, Massachusetts, Massachusetts. But yeah, they're looking for 40 grand. Republicans from those states, New York, etc., New Jersey, the good old Northeast. Unclear if those lawmakers have signed off. But remember, this has to go back to the Senate, then it has to come back. I'm interested to see what the Senate has to say. Because, yes, it's a record tax break that's going to have a record deficit. That's where it goes, and that's where it's not fiscal conservatism, and these numbers are just poof. And each party does it. You look at Republicans, they love to tax cut, but they're not willing to make the cuts necessary to offset it. That's what's happening. They're not willing to make the cuts necessary, probably because their constituents would revolt when you're talking about cutting $5 trillion over 10 years to balance it. Okay. And then you have Democrats that spend the money and they're not willing to tax their constituents enough to offset the spending. It just goes back and forth, each side, because guess what? It's very difficult to offset it. And, $5 trillion over a decade. Yeah, I want some tax cuts. Let's go. I don't want a tax hike. Okay. I also don't want $5 trillion added to the deficit over 10 years. And yeah, you can make the case that growth is going to add in there. Of course, growth is going to add in. Growth isn't going to even come close to offsetting the $5 trillion. I just don't get the conversation, man. What happened to fiscal conservatism across the board? Nobody talks up for it at all, period. Yeah, it goes both ways. All right, what else do we got going on? Apple, Fortnite, apps. Fortnite, they're back in the App Store after 5 years. Pretty remarkable. That company's done pretty well over that period of time, considering the context. 2020, they were kicked off after Epic updated the game over the web to take payments directly. But guess what? Apple wanted their 30% cut, and yeah, there it is. Fortnite's back in the App Store in the U.S. 5 years later. They're appealing the latest order, but yeah, they have to change their apps to accommodate links to buy content. And man, talk about going from a literal monopoly, because I see it all the time, as in everyone sees it, right? But nonetheless, Fortnite's back on there, and Apple, they're going to have to deal with that. Apple shares down in the market right now, down about $1.50, trading at $205.55 right now. We jump over to Tesla. So, quite a day for Mr. Musk yesterday. He had a lot to say. Seemed like he was in damage control mode, right? When he's talking about he's going to be at Tesla for 5 years unless he dies. It is funny when somebody puts out what's going to happen in 5 years, right? Especially Elon. Elon was talking about, nonetheless, self-driving cars coming in like 5 years in 2000 and probably 13 or something like that. Who knows what's going to happen is the truth. When he said he was stepping away from politics and he won't invest that much money going forward, I just don't believe him. Because why would you? He's shown that he's willing to invest what he wants. And I feel like it's part of this deal that he's trying to say, don't worry, I'm going to step away. Tesla's going to be fine because I'm not going to be spending this type of money in future elections. He's willing to put it all out there, folks. You better believe that he's going to come back and speak his mind, put it all out there. And yeah, so I think he's, it's for what it's worth, right? To think that type of volatility, and listen, we got 4 years until another presidential election. Maybe that's the next time that he does it. And if that's what he does, I'm sure investors will enjoy that. But nonetheless, Tesla shares trade higher, give it all back. We're right where we were at the open yesterday, trading right now at about $344.60 for Tesla. Yeah, UNH trade down to 302 right now, down about $20. That's going to weigh on the Dow. UNH down $20. Markets in the red, folks. Stay tuned. We're coming back for the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now, down about 40 points on the open. NASDAQ 100 down 151. We got the Dow off 382. We check in on UNH on the open right now. UNH down about 20 points, 6.4%. Yet again, we check in on Target on their numbers, down 7% or $7 almost to 91.23. You got Lowe's on the flip side of that. Oh, they give it back. Look at that. Lowe's flat after trading all the way up to almost 240. We're trading right now at 231.15. Microsoft shares slightly in the red, down about 0.5%. Amazon down 1.5% right now. Apple off 1.25%. Nvidia in the red by about 70 pennies. Check out some of the other chip stocks. AMD shares slightly in the green right now. All right, we jump over to Google shares. So Google flat at 165. And this one's an interesting one. When you look at the future of some of these numbers. So Google launches $250 per month VIP AI subscription service. Now, OpenAI already has a $200 service. Where are they? Yeah. ChatGPT Pro, they launched that in December, $200 a month, scaled access to the best models and tools. This $250 plan from Google, do you know how much memory it comes with? How about 30 terabytes? Now, $250 a month is a lot of cash for storage, okay? But it comes with everything else. Google One AI Premium. Excuse me. Yeah, they have a bunch of different ones, okay? That one can cost $20 to $150 depending on the storage size you want for their cloud services, but 30 terabytes is what you're talking about. So they're lining up their best customers. But you know what the other flip side of this is, folks? That's $3,000 a year, which is nothing if you're using it for any type of monetary value. And even beyond that, you know, look at some of the video generation tools, okay? And that's what they say here as well. Let's see where it is. Yeah, here it is. So the Ultra plan includes more experimental projects like Project Mariner, an agent research prototype that can handle up to 10 tasks simultaneously, as well as the latest Gemini models, early access to the VO3, and the company's newly announced video generation tools. The video generation part of this, man, if you're in content creation at all, TFNN, we content create, okay? I think about it all the time. We look at it. Payrolls in a company, folks, are usually the biggest cost, okay? You're paying employees. You got it every couple weeks, every week, every day, right? You're paying payroll. You're paying taxes with it. You're paying benefits, insurance, 401k, etc. $250 a month, okay? When you put that to what an employee does, you put it to the productivity. You're watching these companies. The level of value that they're going to be able to achieve with some of these services is remarkable. $250 for a service seems absurd in prior context. $250 a month for something that can do 10 different tasks at once, help you just productivity-wise go through the roof. And then when you start talking about video generation, those types of tools, right? Really, because I've experimented with many AI models, and you know, the whole deal right now is the more you use it, the more you have to pay, basically, right? Because they can't give you unlimited for a month, because if they give you unlimited for a month, what are people going to do? They're going to sit there, they're going to maximize it, and they're going to generate 24/7 and have the computers running. So what they do is they give you credits. So you sign up for a service, and these AI generation tools, usually they give you credits that you can use depending on how much you're creating, using, etc. That's going to begin to dwindle. And when you have access to some of them, folks, video generation wise, I mean, there's no reason why movies aren't going to be made there. Everything is going to be made there. Short films, YouTube Reels, all of it. Now, it's interesting here, at the same time, you get YouTube Premium in here. Okay, so you get YouTube Premium. Where is it? You get 30 terabytes of storage. Yeah, YouTube Premium subscription in there as well. And yeah, that's not going to be $250, but you see how the value could be there, even at a very expensive price to that degree, when you're talking about $3,000 a year, but the productivity is through the roof. All right, we check back in on yields. The 10-year still sitting about just above 4.5%. We check back in on the dollar. $99,568, well below 100. We're talking to our man Teddy Cakes that next segment. Stay tuned for that one, folks. We'll talk some currencies. Gold up by $25 right now. Yeah, how about VGZ yesterday, man? Right? You talk about an acceleration. Now, we don't have this one, the gold report. Say, folks, my dad always had faith in this company. He believed in them. Longer term, okay, when you're getting in these tiny companies, short term, yeah, it's a problem, right? They're an explorer. Okay, they're not a developer. And so, yeah, you're going to have extreme volatility when they got to find a partner. The partner's got to put capital into play. They got to get it out of the ground. Nonetheless, you talk about a move, man. Up to 125 yesterday, and that was on some big-time buying. That's a weekly, but check out the daily. All right, look at that move on the daily. We had that volume on April 22nd, and a month later, you plow higher from 104 to 125, and that's how you like to see a stock break higher, man, on some volume. On a weekly basis, if you're in this equity, I will say we're coming up to the 1 to 1.618 expansion, which is at about $1.31. Yesterday we hit 125, and that would be a 1 to 1.618 expansion of when this thing began at about 32 pennies. Yeah, back last February. Check out some of those other gold equities. Quite the surge higher across the board yesterday for some of these. Look at that move in Harmony, right? You just traded from 1382 to 1565. AEMs have been another strong one. We're up to 114, quite a move yesterday from the bottom of the trend. AGI, I was thinking. AGI, Alamos, yeah. Yeah, up 2% right now for Alamos. That's another strong one. We jump to some of the copper stocks. Freeport, yeah, just chopping around, man. Copper, and look at Southern Copper, right? Just downtrend channel. We back it up. You're talking about a channel that Southern Copper's been in for a better part of a year. Just trading lower prices, lower lows, lower highs. And then we take a look at copper right now. On the weekly, you're positive. But yeah, just consolidating since that move lower. On April 30th, you're sitting at 468 right now. We have an upper boundary of about 480, and then the top end range of about $5.20 for copper. We check out the VIX, sitting at about 1889 this morning on the volatility index, and you check out crude. Some interesting action on crude. Story breaks out there that Israel might strike Iran's nuclear facilities. That was the acceleration higher, up to 64.19, but it is pretty remarkable that you get that type of news. And even on that type of news, you got crude trading at 62.51 right now. Cannot find a bid. Barely positive. Think about that. Barely positive when Israel might be striking Iran, right? War breaking out even beyond. Nonetheless, no higher prices right now. Crude, barely in the positive. We're trading at 62.50. All right, folks, stay tuned. We're coming back with our man Teddy Kegstadt. We'll talk some currencies. We'll talk some commodities. Always a good conversation. Don't go away. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets in the red right now. NASDAQ 100 down about 94 points. You got the S&Ps off by 33. We got the dollar right now down about 481 ticks, trading at 99,636. And as we do every Wednesday at 40 past the hour, folks, let's jump over to our man Teddy Kegstad. You can check out his outstanding Tiger Forex report right on the front page of TFNN under the newsletter tab. Check that out. Only $97 a month, folks. You gain access to an outstanding webinar. It comes with a 30-day money-back guarantee. I encourage you. Check it out. Go sign up for it while we're talking to our man Teddy. Teddy Kegstad, good morning.
Good morning.
So we got some action, man. We got the dollar oscillating around that 100 price point, a little lower. We got yields rising above the 10-year. I know you like that 30-year, man, above 5%. Maybe that's where we kick it off. What do you want to talk about this morning?
I think that this is a good time to talk about divergence. So
okay.
We have yields rising and the dollar falling. This is a good indication of how when you're trading, when you look at fundamentals and technicals, you always have to manage them properly and don't just rely on them as a tried and true mechanism. If it was that easy, everyone would be doing it, right? So, and this is one that goes to show it. Like typically on many days or many intraday moves, you will make a play in a dollar pair, dollar versus whatever other currency based off of yields. You will look at it in that view. Right now, if you're taking that stance using yields as a guide for you, you're losing money. That's for sure. Yeah. So this is where you can't just. It's not as simple as like, oh, yields are up, buy the dollar. Yields are down, sell the dollar. That's not that simple. So it's a very interesting thing. But this is also, when you have divergence like this, usually you have divergence like this when you are getting ready to set off a big trend, or what you're doing is you are actually establishing a range trade. Because you're having a rubber band effect. No matter what, you're still going to have to come back to some sort of midline between that divergence. The divergence doesn't last forever, otherwise it wouldn't be divergence.
Yeah, right. No, and they're correlated to a certain degree once everything maybe recalibrates. That's how I trade, and I'm glad you're talking about it because it is interesting, man. That we have yields spiking, and even with a higher yield, nobody is getting dollars to access that higher yield. Now, eventually they will, because that's just how it works, right? That's the relationship, but it's not happening, and it's not happening on days we have the market trading lower. So we have, people essentially pulling money out of the market, and they're not putting it in fixed income or in the dollar. Do you tie that to equities at all? What do you think about equities? I know that yields in dollar, but it's interesting that they're both falling, but it's not going into U.S. equities, at least as we're lower, at least, nothing, but we are lower in the same context right now.
Sure. Okay. So let's pick, what's your favorite oil stock symbol?
Oil stock.
Seriously.
Exxon. Why not? I don't know, mate,
right.
But why not? We'll go Exxon.
Okay. And that's what's their symbol for Exxon?
XOM.
XOM, right?
I don't know many symbols. You pulled me out of the oil. CVX or XOM.
Yeah, that's right.
Probably the two oil ones I know. Chevron or XOM. Yeah.
Okay, all right, so here's a very interesting thing. You look at XOM, if you look at that chart over the past, say, like month and a half.
Yes.
And then you look at oil, what does that look like?
I'm pulling them up. Yeah, pretty similar, right?
Pretty similar, right? So right now, I would say that with this right now, what you're looking at is that you're seeing that the range trade in oil is starting to set a range trade up in the oil stocks because there's no trend right now. We're hitting the upper barriers. There's no reason for us to break out to the upside, and there's no real reason for the market to tank right now. Now, what is interesting is like where interest rates right now are diverging from the dollar. One thing they're not diverging from is the real commodities, because since yields are higher, the cost of carry goes up, which means that influences bearish pressure, meaning that bearish pressure will be lighter because interest rate pressure is actually helping to support the price of oil. Now, most people who don't trade oil or commodities don't understand what I'm talking about. Cost of carry is the interest rate that's charged on all those deliverable amounts of oil or any said commodity. Okay,
sure.
So because usually that's finance. So depending on what the interest rate is, now those are market rates. Those aren't bank rates. Okay, so that means since yields are going higher right now, or at least pushing higher, in the short run, that's reflective in crude oil prices also, because they know that at the current level, everything that's going to market is being financed at that higher level versus what was, say, a month ago, right? Yeah. So and what is that doing to the oil stock? Exxon's going down because the profit margin is going down right now. Makes sense?
Yeah. Of
so
course,
so anyone who trades Exxon stock, looks for that, thinking like, okay, right now, odds are their earnings are going to be shrinking right now unless crude takes a nice, really big dive, Yeah. So, in which case that would alter that.
Since you're talking about, and I see that, we bounced to 64. We got that news out that potentially Israel going to strike Iran. Mm-hmm. Nonetheless, it is pretty interesting. Can't even find a bid on that type of news. Not saying that it would spike to the moon, right? But we're sitting at $62. We gave back the entire move. Are we capped in this 64 to 65 range right now, you think, on crude?
I think that right now we're looking at a high of probably 65, 66, and that would be a spike. I don't think it would be sustainable. And I think that the floor right now is probably around 57 to 58. I would like to see it get back down to 52, which I think it could be in a few months, without a doubt. Sure. That's very, very possible, especially if there's a rate cut. And we'll see how the economic numbers are and what's going on with the economy too. Yeah. So the demand for oil may actually decrease into the summer months because a lot of people, they're strapped, so they may not be traveling at all this summer. Which
Target's
means they're not
blaming it all on. I was just going to say, Target's blaming it all on the economy this morning. I'm not sure that's the case, but I think they got some issues, man. Talking about, just that a consumer out there. We know it. They're feeling the heat, man, for sure.
Right. Well, you know what? When it costs all the money to go out for, to a restaurant right now, if you're on vacation, you're eating out every day, right? Yeah, I think that's the biggest drag. So anyhow,
it is.
Sorry.
No, it's just it takes a while for our to get used to these costs. I think we're still dealing with a recalibration of our brains of how expensive things are. Even though, guess what? That's the case, man. We're there. Hey, what about yields in terms of the 30-year at 5%? I'm hearing a lot of people talking about 5%. Of course, we're 30 years at 5 now. We got the 10-year at 4.5 about. What do you think about these levels of where we are with yield?
Sure. Okay. I think that
because can I add in there that we got the taxes going on, of course, because that's do you think that's what's lifting yields? I mean, it's so short term, but it is going on right now as we got kind of a little bit of spike with the 30-year above 5. Hey, I tell you what, Teddy.
Yeah.
Can we hang? Can I leave the listeners on a cliff on that one, and we'll come back?
Absolutely.
Can we come back on that one? All right.
We'll talk about rates.
Perfect. We're going to break, folks. We're going to talk about yields, man, as we got the 10-year right now, above 4.5%. The 10-year negative by 10 ticks, as Teddy was talking about, man. You got yields, you got the dollar, we got divergence, and we're going to finish up this conversation when we come back, folks. Don't go away.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps down by 27 points, right where we were at about 8 a.m. this morning, up to those highs. We're talking to our man Teddy Kegstat. We're talking a little bit of yields. So, Teddy, I know we talked about the divergence with yields in the dollar, but I was just wondering about kind of these price points. Nice even round numbers, the 30-year at 5% and the 10-year at 4.5, and what you think about those levels.
Well, you know what? I have both the 30-year and the 10-year chart up, and I'm looking at them, right now. I think no matter what, you're going to see them both test the lows, meaning you're going to see a little bit of pressure on yields, especially, I would say, for the next couple weeks until we get closer to the next Fed meeting. So I don't think we're going to hit the extreme of where we were in January, just because the expectations of rate cuts has grown by the consensus, if you will. When we started the year off, people were looking for 2 quarter-point cuts over the course of the year. Right now, depending on who you listen to, people are predicting 4 to 5 quarter-point cuts. I think that's an extreme. I really, really don't think that's going to happen because Powell doesn't like Trump, and I don't see him giving him what he wants. And I'm just saying on that level alone, as far as what he should do or shouldn't do, that's a whole other story. But the market is commanding higher yields, and that's the reality, is that people are starting to get used to, getting interest on their money, for one, let alone banks are getting used to charging higher rates. So I mean, we've been trading near zero for so long. People forget that that's not normal. It's just not, Yeah. So I think that until we really have a rate cut, and even still, the market wants higher yields. I don't see us having any real big reversal of trend, meaning lower trending yields on a big basis, on a multi-month basis, unless you were to see Powell come out and do a 0.5 point cut with the expectation of another 1/4 point coming within the next 1 to 2 meetings. Something like that, then I could see we skyrocket, in bond prices and 10-year note prices. So
I'm not sure we want that. What's the economy look like if that happens, though, right? In terms of where we go. But I agree, man. Recency bias, 20 years almost at 0% coming out of it, man. Teddy, thanks so much for the great conversation as always, man. We'll talk to you next week. Have a great Memorial Day as well, Teddy.
Yep, you too.
Folks, thanks so much. Stay tuned. Basil Chapman is coming up right